All right. Hello, everybody. This is Tom Randall again from GoldenCare. I want to welcome you to this webinar. I do have us in presentation mode, so you can't yell at me yet, but I'll open it up at the end for questions. And I know your time is valuable, so we're just going to go ahead and get started here. Hopefully have a few more people log in as we go. But basically, you know, what a fun time to be in this business. It's actually, I've been with GoldenCare, I'm in my 21st year here, and this industry is always changing, so there's never a boring moment. And one of the things that we bring to the table at GoldenCare, besides all the tools you see on your screen there, we've got a great support system. We don't just throw you against the wall and hope you stick when you're a GoldenCare agent. We try to give you tools to help you be successful out in the field. And along with that, as part of it, is training and things like this. But one of the things we're excited about over and above our support tools and some of the things we offer that you can find on our website is products like this. And one of the things that I've had the pleasure of over these many years working with some of the very top agents out in the industry, and we were all long-term care for years and years, just really pushing long-term care as hard as we could. And as the industry started changing and evolving, we realized, you know, the underwriting wasn't going to get any easier, et cetera. And that's where products like this come in. This is a great little GTL product. A lot of you know about the Kemper home health care product that we're one of the top sellers on in the country. And GTL, I don't think they have any bones about it. They saw the success that Kemper was having, and they thought, let's enter that arena and see if we can help out. So GTL kind of mirrored their plan a little bit over Kemper, but what you're going to see is I think this plan's pretty powerful and very flexible. So I think hopefully what you'll see is that it can be a really nice part of your portfolio, because there is an ever-widening base, unfortunately, of people who just can't qualify health-wise for long-term care, and that's where you can step in so nicely with the product like this and have some good success. So let's jump right into it. Again, I'll open it up at the end for questions, but basically today we're going to talk just a tiny bit about the carrier to make sure you feel comfortable there. We already talked a little bit about the product niche, but we're going to talk about why we brought this on board and why we think it's important. But mainly what this webinar is going to be this morning, it's a relatively short webinar, is about the plan details. These plans aren't too complicated. They're not like these huge full-blown long-term care plans that have tons and tons of moving parts. These are simpler plans. And you're going to see at the end there just some real quick slides talking about completing the app and how easy it is to calculate rates, etc. So at the end, of course, I will open it up for Q&A and leave it open as long as we need to do that until you feel comfortable. Let's jump right in. Again, we are in mute. You'll get all these slides later on, so you don't have to take copious notes. But basically, this is kind of a niche product company. They're out of Illinois, as you can see in the screen there. They're not these huge multi-billion-dollar companies like we see in the long-term care arena, but they have had really nice, significant growth over the last years. They've had some really nice, they're about $500 million company. Their surplus is up, assets, reserves, premiums are up. So everything's looking really good for GTL. And if you know their product line, you'll know you can get by without being a huge multi-billion-dollar company, because all these are really supplemental type products that have design benefits. So there's not as much risk in there for the carrier that they're going to have these huge unruly claims like we see in the long-term care industry. But I tell you what, a nice little product line they have. A lot of you are familiar with our critical cash plan on the far right there. We're real proud of that plan. We helped design that with GTL specifically to fit the need for those people who weren't quite healthy enough to get long-term care but needed a really nice powerhouse product. That's a great CI plan with a lot of long-term care flavor to it. If you're not familiar, check out our website and make sure you become familiar. And also, just a quick plug for that Advantage Plus plan. Want a really nice HI plan, that one in the middle? Really strong HI plan. You're going to see one of the riders we talk about today has a little bit of that flavor from the Advantage Plus plan. But what we're here to do today is to talk about this short-term care plan from GTL. Okay, let's take a bird's eye view if we can. First of all, if we look at this from a broad perspective, number one, almost everybody gets through. That's what we love about it. And you're going to see that, the third bullet point down there. But what I want to show you, and some of you guys who may be familiar with the Kemper plan a little bit, Kemper is a little bit of a lighter plan. It's $150 a day max. This one, as you'll see, can go up to $450 per day for a full year. Or less. And the reason I say or less is you're going to see this plan is very flexible. We can scale this plan down to be super affordable, or we can power it up to the $450 per day. We'll talk about that in a few minutes. Nice part about plans like these, again, very easy underwriting up front, and the benefits are paid regardless of any other types of insurance. They're true cash indemnity plans. So if you hit the triggers of the policy pays. And We already alluded to it a couple times, didn't I? Almost everybody qualifies. There's only 2 or 3 health questions with this plan. Just like Kemper, they have the, are you currently in a nursing home or assisted living or receiving home health care? And the next question is, are you unable to perform any of your activities of daily living, or are you cognitively impaired? Okay. For those of you who might be familiar with the Kemper plan, I do throw in once in a while, you'll hear some comparisons. One of the pluses of Kemper is they don't even have that cognitively impaired knockout question. So this one does have the cognitively impaired on the app. Okay. Little significant difference there, but again, throwing the net wide, hugely wide with both these products. There is one other catch on this product. If you're selling Plan C, which is the most robust plan, they ask one additional question, but you can see it's not a very scary one. It says, do you expect to be in a hospital, nursing home, assisted living, or do you plan to have surgery or home health care services in the next 2 months? So basically, again, we're throwing that net plenty wide, so we're going to help as many people as possible. This plan also offers up to $120 per day for 60 days for home health care aid. Remember, with the Kemper plan, that's $40 per day. You can buy 2 plans with Kemper to get it up to $80. But with this plan, they say, no, we have plan A, B, or C. You can get $120 per day. So really nice there. Everybody loves that home health care aid. The nice thing here is that Kemper, if you remember, does require a 3-day prior hospital for a lot of the states. This one, there's no worries with that with any of the states so far. It's just no prior hospital stay required. Both of the plans, remember, Kemper has a built-in prescription drug benefit. This one does too. This one goes all the way up to $600 per year for a couple of the plan options that I'll show you. And it's got built-in restoration of benefits, just like the Kemper plan does. And remember, Kemper just had one big rider that had several benefits built in. This one breaks it apart and says we have a really strong hospitalization benefit. That's that HI plan I mentioned. Critical accident, an ambulance, and a dental and vision rider, all separate little riders you can throw on here to really custom design these plans, and we'll talk about those riders in just a couple minutes. What are the claim triggers for those of you who are sitting back wondering with bated breath? Well, the claim triggers are a lot like we have with long-term care, but there's that no 90-day expectation. Okay, so basically it's the functional or cognitive impairment. Can you perform 2 of 6 ADLs without substantial assistance? Okay, and again, for those analyticals on the phone, hands-on or standby is fine, so you don't have to worry about that. Cognitive impairment is the other one. So it's a lot like what we're seeing with the other policies out there with long-term care, but there is no 90-day expectation, which is, as we know, is a big difference. And there is a 6-month pre-existing condition limitation with a plan like this, and that's because most policies, if not all of them, have a pre-existing condition when there's no underwriting or such small-scale underwriting like this. So it's just to keep the company safe. All right, let's look a little bit closer here, and this is all laid out real nicely in the brochure that you can get. The base plan, home health care benefits, just like Kemper, Plan A is really, really similar. Different types of services that may come into somebody's house in any given day. It'll pay up to those amounts maximum per day, up to a total maximum per day of $150 for Plan A. Easy stuff. I won't list them off to you because they're on your screen there, and you will get these slides obviously as well. Plan B, a little bit higher, up to $300 per day, and Plan C, you guessed it, $200, $300 for the final medical social services, up to a maximum of $450 per day. So if you do the math, and we did it for you, for 360 days, $150 is $54,000, $108,000, and $162,000 respectively. So you can see pretty nice, robust little plans for a policy that's so easy to get past. That would be one bucket of money is the easiest way to look at it. The next thing that has built into these plans is what's called that home health care aid. Wow, easy for me to say, sorry. Home health care aid benefit. And if you chose Plan A, you'd get the $40 per day. That's a lot like Kemper, right? $40 per day. And Plan B gets $80, and Plan C is $120 per day. So again, the reason this policy sells a lot of Plan Cs is that really nice $120 per day home health care aid benefit. Remember, this pays over and above the base plan benefits we just talked about. And with this plan, we already mentioned the fact that it doesn't have to have that prior hospital stay that Kemper requires in a lot of its states. This one, across the board, no prior hospital stay is required. Just like Kemper, this one is the maximum benefit period of 60 days. So again, we did the math for you, so you don't have to worry about it. $40 times 60 is $2,400, $4,800, and $7,200 respectively. So not a huge bucket of money, but a bucket of money nevertheless. And this is one of those things that we tell agents all the time. We know you have your long-term care hats on pretty securely once in a while, and you start looking at policies like this, and you say, boy, it doesn't do this, it doesn't do this, it doesn't do this. Remember, we can't stress enough. We're not selling this policy to somebody saying, boy, you're healthy as a horse, let's give you this plan instead of long-term care. We're selling this policy to people who say, I heard a little bit about the need for long-term care, my mom needed it, whatever the case may be, and you know what, or maybe I just can't afford long-term care. These policies are very inexpensive comparatively, obviously, and the biggest thing is we love the fact that it can help people who just can't get long-term care because of their health. So remember that as we go through. Don't negative Nelly on it. Look at the positives and look at the things it can do for you and for your clients at claim time. Okay, off my soapbox. Let's jump back in. Built-in prescription drug benefit. I'll tell you what, pretty nice benefit here. This Kemper, remember, we talk a lot about this. Teach and educate your clients about this built-in rebate. It makes this policy so inexpensive because especially when you're looking at people who can't qualify for long-term care, a lot of them have that shoebox full of meds that they're taking, and they can get good rebates with those. So same thing here. Simple concept. It's $10 per refill of generic drug or $25 per refill of a brand name drug. And the reason I say per refill is remember that it's any drugs are on, there's no smoking guns, it's whatever the case may be, as long as they get it from a doctor, prescription, etc. If the doc's really nice to them and says, hey, you know what, we're going to only have you refill this once a year or once every 6 months, well, that's fine, but you only get 2 rebates for that. If you have it refilled every month, you get 12 of them. So just make sure you kind of educate your clients on how that works. Okay, it is payable without regard to eligibility for any other home care benefits. And we already talked about the fact that each refill received. And they say best to wait. That's kind of GTL's talk. They want you to wait for the end of the year and send them all in. But you don't have to. You can send them in as often as you want and get rebates as they come. The nice part about this plan, if you're on a lot of different meds, it's a nice rebate. $300 per year potentially with Plan A. But if you go Plan B even, or C, $600 per year potentially. So we know a lot of people won't hit that obviously, but even $200 or $300 towards these smaller premiums can really make these plans very affordable. Okay? This prescription drug is not available in Kentucky. If you're selling in Kentucky, this policy probably isn't for you. There's just no riders involved or anything in Kentucky. It's very inexpensive, but it doesn't have a lot of power. So I'm not sure what I'd do if I was in Kentucky. All right. Let's jump to the next one. Built-in restoration. Remember, these are end-of-life plans. We want people to know that they can keep these and have the possibility for multiple claims. Okay? So basically the way this works, the base plan, the home health care aid maximum benefit periods restore if you haven't needed home health care services for 180 consecutive days. Okay. Obviously, they want to keep people safe. You can't just pull mom and say, we're going to stop giving you services so we get more benefits. You have to have a doc say that you're healthy enough you wouldn't need services. Okay, and that's just common sense. No limit to the number of times it can be restored. And then remember, the prescription drug benefit, for example, and the other riders, they either restore annually anyway, or they have their own maximum lifetime benefit rules, and we'll talk about those as we go, and I put them right on the slides for you for future reference as well. Let's look at those riders. The first one is the optional rider for the accident and sickness hospitalization rider, and there's some different rules in different states. I can put them up top there. But basically, it's pretty simple stuff. In most states, it says if you're in a hospital and you're there for 3 or 6 days, it'll pay for 3 or 6 days. I'm just talking around myself. The home health care Plan A is $100 per day for 3 or 6 days. Plan B will pay $100 or $200 per day for 3 or 6 days. And Plan C, you could choose $100, $200, or $300 for 3 or 6 days. Okay, what I was trying to get to is the full daily benefits are paid as long as your confinement was at least 24 hours. So even if you're in there for observation, whatever the case may be, if you're in that hospital or for 24 hours, you're going to be able to get these benefits paid. Okay? Benefits restore on this one after 60 days of not being in a hospital. So pretty easy stuff. The next optional rider we have, and you can see there's some limitations. There's a one-time 30-day waiting period with this. That's not an elimination period. It's just a one-time wait after the policy is issued. And it's not available in several states. You'll see up top. critical accident rider, and this is a real simple concept. Regardless of what plan you choose, A, B, or C, you could choose a $5,000 or a $10,000 critical accident rider. And what it says, if you have an accidental death, that's easy. It'll pay the full $5,000 or $10,000. If you have other types of fractures or dislocations that you can see listed out there, it'll pay a percentage of that $5,000 or $10,000. You can see the numbers listed on the screen there. Okay, so the maximum amount it pays out if you have a hip dislocation, for example, and it pays out a portion, then you accidentally die, it'll pay out the remainder up to $5,000 or $10,000. There is no restoration of the maximum benefits with this rider. Okay, it is a lump sum payment after emergency room or urgent care because it is an accident rider. And there are a couple little things just to be aware of. They're all clearly in the outline of coverage. I put them on here just to make you aware as an agent. There are some things like fracture your fingers, toes, etc. that aren't covered, so just be aware of that before you sell it. Next one is an ambulance benefit rider. Again, it's not available in Kentucky. This one's a really simple concept, a little stronger than what we have over at Kemper. This one's at $200 per trip. And again, that's ground service to or from any medical facility. You can use that $200 up to 4 times a year. And there's a lifetime maximum with no restoration, a lifetime maximum of $2,500 with this rider. Nice part here, again, no hospital confinement required. It just says you have to go to or from a medical facility. So nice little add-on there with the ambulance. You're going to see it's very, very, very inexpensive for all ages. The next one is our really strong dental and vision rider. This is one of the reasons I really like this policy. If you're in this industry and you've rolled up the shirt sleeves and you're out in the trenches, you know there's companies jumping on board with vision and dental riders all the time, especially dental riders. And you're going to see that these are real popular. A lot of seniors, there's nobody else paying some of these benefits, so they're kind of anxious to looking at these type of riders. So what I like about this is you can see here, pretty strong rider choices, $400, $800, or $1,200 per year. And you can get the $1,200 even with Plan A. So it doesn't matter what plan you choose, A, B, or C, you can choose either the 4, 8, or 12. So it's kind of nice there. We might see some people with Plan A's jumping on the $1,200 per year D&V rider. Okay, it's not available in some of the states as you saw listed above, but basically this one a little more intense. There's a per calendar year deductible and copay. It's $100 per year deductible, and there is a copay. It'll pay 80% after that point. There is limited first-year benefits. This is just to keep the company safe. I say usually half of the maximum above. So far, it's always been half. I'm just being safe when I put this slide together. So far, it's half of what you see above. So again, just to keep the company safe, saying we don't want you to buy this policy just for this rider. We want you to be able to make sure you're in it for the win. So prescription eyewear paid at $200 per year. Nice. Eye exam or refraction paid at $50 per year with no deductible. And the dental cleaning paid up to $75 a year with no deductible. So those are nice benefits that a lot of people really like to have the advantage of. We did put a couple extra slides in here just to show you to read your outline of coverage as an agent. Again, there's no smoking guns here. It's just a few details on the dental side of it. After 3 months, you can have that annual exam and dental cleaning with no deductible. After 6 months, they'll start to do fillings and root canals, and after 12 months, they'll do more intense stuff like bridges, crowns, etc. After 12 months, replacement or repair of bridges, etc. So basically just a few waiting periods there to keep the company safe and keep the premiums in line. Remember, this is annual restoration of benefits again. Vision, not as many little disclaimers, but basically you wait 3 months after the policy issue date, and then you can have an eye exam or the eye refraction up to $50 per year with no deductible. And then after 6 months, you can do the eyeglasses up to $200 per year. All right, this last one that I put in here is not really a rider. It's built into every plan, but it's not contractually built in as part of the policy itself. So I put it at the end just to make sure you're aware it's a little bit different. But they do make a big deal about it. You'll see this Mayo Clinic is right on the front of the brochure, and a lot of people know about the Mayo Clinic, so it's a great benefit to bring up. Basically, just a little contract they have between the companies to say, hey, everybody who has a policy can use the Ask Mayo Clinic free. And the Ask Mayo Clinic has a 24-hour nurse line with 24/7 access to RNs with tons of experience. You can do the Ask Mayo Clinic online, which is obviously 24 hours online, for private assessments, etc. And finally, the Ask Mayo Clinic critical illness support, which is for those major deals like cancer, heart attack, and stroke that people are worried about. They can get top specialists to talk about treatment options, medications, etc. So some really nice things. They put some percentages on there showing 98% of all the callers report a high level of satisfaction with this Mayo Clinic call-in line, etc. So you guys know wherever you're dialing in from today, I'm sure you've heard of the Mayo Clinic. It's here in Minnesota, but very popular, very successful entity out there that people know about from across the country. So it's a nice little add-on to this policy. Again, it can't contractually be there in case something happened 10 years from now and that relationship ended. They want to make sure people know. It's probably going to be there, but it's not part of the built-in contractual absolute guarantee. Okay? Some of you might have been wondering, where's the state approvals? I should have brought this up at the beginning almost, because they did just approve a couple more states. We're real happy, boy. 32 different locations now this policy is approved in as of January 24th. Just got 2 new states approved. I think the last 2, if I remember right, were Colorado and Rhode Island were just approved. The red states there that you see, Alaska, Delaware, Hawaii, etc., those are states that Kemper isn't available in. So if you really like a policy plan or concept like this, and you're looking and waiting for Kemper or whatever the case may be, great opportunity here because Kemper's not even available in those states. And also I did put some other little notes down at the bottom about where certain riders aren't available, etc. So you'll see all that when you get your state-approved materials. Everything will make sense. I just try to put it all in these slides so you'd have a good bird's-eye view if you're selling over the internet or selling in multiple states, etc. Completing the app. Basically, this is all stuff for later on when you get the slides. This is really quick. I'm going to go through it, see where I'm at time-wise. I'm going to go through it really quickly, but don't panic if your computer's slow or if you think I'm going too fast. All I'm trying to show you with this is how simple it is. There's only 2 or 3 health questions on it. There's only 5 pages in the entire app. The top of the first page talks about where you want to send the policy to, whether it's you or right to the insured. The middle sections for your applicant, mom and dad, can be on the same policy. And there's their address information. Down at the bottom, you make your first choices. Do you want to pay it annually or monthly bank draft? Do you want to do the home health care plan A, B, or C, that main plans we talked about? And step 2 talks about the optional benefits that we talked about. These are the riders. There's the ambulance rider there. You can see applicant 1 and 2. And then we have the accident, sickness, hospitalization rider choices down below that. So everything we talked about in this presentation, real easily broken down, very, very simple to fill out. You can have a requested effective date on there based on their limitations that we talked about. The pre-existing or pre-qualification, there's your major health questions there, a little third of a page. There's your 2 questions on there we talked about already. And if you do plan C, you have that 1 additional question talking about in the next couple months, do you plan anything major? So you can see these are very, very simple applications. Okay. There is one extra thing that I just spent a second on. It talks about the fact that you have existing supplemental health insurance that's going to be replaced or changed because of this coverage. This isn't the type of policy usually you'd ever change or replace anything with. We might see it once in a while with Kemper. Maybe somebody has a Kemper plan and you want to change for this for some reason or something like that. It's possible. So it's not a knockout question here, but you maybe have to fill out some additional forms, etc. if you click on that. So, or if you choose that. So basically just keeping you honest there. At page 3 is the A&A page, the acknowledgments and authorization, real simple stuff. And page 4 is your agent statement saying I didn't lie about anything on this application. And down at the bottom, the whole rest of that page 4 is your monthly EFT approval. Quick note to you folks, if you do the monthly draw out of the checking account, then you realize you don't have to have any cash with that, which is nice. So you can just set it up and have it come right out of the bank account. And page 5, on the very top, it'll tell you right there, detach the notice below and leave it with your applicant. And that's going to be your privacy stuff that you're used to with most of your products you're selling. And down at the bottom, if they did decide to do conditional insurance, or if they wanted to give you a down payment, if you were doing annual, for example, then it shows that you have that receipt there for the client. Okay. They do do it a little different with GTL with this policy. They have a whole separate little application. They call it an applicant information packet. It's all the usual suspects on there. The Medicare duplication notice is included in there. Your HIPAA notice is in there. Your outline of coverage is in there. And then there's one additional thing that I always bring up with agents, just so you're aware it's there. It's the e-consent form. And on this page, I wanted to show you that basically GTL is trying to cut back on costs like a lot of companies are, and they're saying, unless you opt out, we're going to do everything electronically. Okay, and this obviously is available as an electronic app as well on their site. But basically, if you do a paper app even, they're saying, unless you opt out, we're going to send you your policy as an electronic based on the email address you put on the app. Okay, not a big deal. Some people like that. Some people don't. So if your clients are there, that's why I want to tell you as an agent to do due diligence. Tell your clients about this and say, hey, if you want to withdraw that consent, it's real easy. Right down at the bottom of this page, it shows you 3 ways. You can call them, write them, or email them, and you can get this as a paper app, etc. So not a big deal, but something I want you to be aware of so you're not surprised or your clients aren't surprised when they're wondering where that mail is, why their mail isn't coming. All right, I'm going to take a drink. And I'm going to tell you that calculating rates is about as easy as you can get because there's not a lot of moving parts here. And with this policy, just make sure that your states are listed there on the rate book you get if you get a hard copy rate book. You can go on their website and they have a spot to calculate rates, or on the electronic app, etc. But this is mainly for those agents who like to use a rate book. All I'm going to tell you is this policy is very flexible. Okay, if we look at a 51-year-old female, and I want to make this plan really affordable, for $14 a month, I can put Plan A in there with no extra riders. I can get $150 a day, $40 a day on the home health care aid side, prescription drugs that'll probably make up the $14 and more, and I can get that done for, again, $14 a month. If you don't want to sell a plan that light, if your policy holder or client wants a little bit more coverage, with that same 51-year-old female, I could bump it up to $87 a month, give her Plan C with maximum riders. That's $162,000 base pot of money with $450 per day, $120 per day home health care aid benefit, a prescription drug that'll go $600 per year potentially, and that'll have those riders on there, $300 per day for 6 days hospital, a $10,000 critical accident, and a really nice, not only ambulance benefit, but a really nice D&V benefit of $1,200 per year. So you can see, basically my point is, from $170 a year up to $1,000 plus, you have some great premium flexibility there to really design these plans to fit anybody's budget. Okay. How does it compare to Kemper? You know what? It's about the same. If you look at Plan A, which is the closest we can get to what Kemper offers, you can see here in this example on the screen, it's a little bit cheaper than Kemper is for the youngest ages. And when you get over age 75, then it becomes a little bit more expensive. So not a big difference one way or the other. But you can see with this plan, instead of selling 2 plans like you do with Kemper, that gets to where we're at with Plan B. With GTL, you could sell not only the Plan B, but all the way up to Plan C, so you could have a little bit stronger coverage for obviously the additional premium. And finally, the last point I want to make on the whole calculation of premiums, etc., is that one of the things we really train a lot of agents on, and we've got some of our most successful agents across the country doing this, is looking at people who are looking at long-term care. They're smart enough not to go through and teach them all about long-term care. They do some health questions first. They can weed out where that person's at. If they find out the person's not quite healthy enough for long-term care, then they pivot right away and say, how about some additional types of coverage with some of these other carriers? And the first one, if you're not familiar again with critical cash from GTL, it's a great CI policy that pays a really nice chunk of benefits. And there's a lot of crossover claims with long-term care, so it's a really strong option. For this example, with that same 51-year-old female, I could go out for $68 a month and say, I'm going to give you a really strong critical cash plan. It's going to pay out based on the major critical illness, including stroke, cancer, heart attack, for Alzheimer's, the big ones you're looking at for long-term care. But mainly it's the stroke, cancer, and the Alzheimer's. You can look at it and say you'll get $24,000 lump sum on diagnosis right away, so your family has a bunch of money to help out and take time off work, etc. If you have to go to assisted living or nursing home, it'll pay an additional $2,500 a month or $5,000 a month if it's a nursing home for a full 2 years, 24 months coverage. Not only that, it has multiple claim potential. You can get up to $432,000 worth of maximum benefit. And again, that covers those big conditions that a lot of people are worried about. Then, as a complement to that policy, what I'm going to do is I'm going to take another GTL plan called the short-term home health care plan that we just talked about today, and I'm going to put together a really nice policy to complement that critical cash plan. Because the one thing with critical cash, it won't cover some of the things like mobility issues and if you have a hip replacement or something. This policy with the short-term can do that for you. Premium, $34 a month, up to $450 per day base home care benefit to help out, up to $120 for home health care aid benefit. And again, this has a prescription drug benefit that could take out a big chunk of this premium and maybe some of critical cash's premium, depending on what meds you're on. And it has a nice little $10,000 critical accident rider and an ambulance rider built right on. So basically for this customer, for $102 a month, I can get them a really nice protection and get them some protection at all. That's the point I always want to make. Remember, this is for somebody who wouldn't be able to get long-term care insurance at all. That's a huge thing, and it's very inexpensive compared to the $2,000, $3,000 that they might have been willing to pay for long-term care. Here you can offer an alternative and a peace of mind for much less ticket, and you'll get them some coverage. Okay? So, these last slides I'm just going to leave here, and I'm going to walk through them just to let you see that they're there. Very easy. You're going to get all these slides in the future just to show you how easy it is to go in and do this through the rate book if you needed to. One thing I will point out is there's no modal factors with this plan, so if you want to do monthly, you don't get penalized whatsoever. It's literally 1/12 of what your annual premium is. And like Kemper, this does go up per age band. So if you sell to a younger person, when they hit the next age band, it goes up a little bit each month or whatever the case may be. So just be aware of those two things. And then I have some slides in here showing you how to go through the website and how to do the electronic app or the electronic illustration, etc. You're going to get all these slides based on the email address that you signed in with, so don't worry about that. You'll have all that material for later reference. Okay? That being said, I'm sitting right at my 30-minute mark here. I do want to tell you this before I open it up for questions. Thank you very much for spending a little bit of time with me. I wouldn't be doing my job if I didn't tell you. The next step is up to you. If you're not already on the GoldenCare team, that's your next order of business, if you will. Start out this year strong. Give us a call, 800-842-7799, or email us or go to our website. Check out some of the tools we have to offer you, but most importantly, start the process. Start out, get appointed, go out there and make sure that you do what you have to do to get some of these policies and get some of these things in your portfolio to help some people out. And we have a lot of great tools you can see on your screen there. LTC CEO, still second to none in my mind as far as an overall selling tool to help seniors in this long-term care market. We've got the CSG actuarial tool, we've got Stratecision, all those things you need to help make your life a little easier, plus a great staff here as well. So I'll stop, get off my horse here again.
The conference is now in talk mode.
All right, now we're in talk mode, so if you're going to yell or anything at anybody, we can hear you. So anybody have any questions, I'll certainly do my best to help you out. Anybody have any questions by any chance?
Are the premiums locked in?
Are the premiums locked in? They basically, as I mentioned earlier, they do go up by age band, so you do have set premiums in any given state by age band. Theoretically, they could file for a rate increase, but with a plan like this, most people don't see that happening because it's such a defined benefit plan. There's no inflation, etc. So most likely it's going to be a level premium plan without any worries about having rate increases, etc. for existing policyholders. Anybody else? All right.
Now, how about California and New Jersey? When are they coming on board?
New Jersey might be coming on board. I never give a time by any stretch, and I'm going to try to cheat and see if I can find my... Yeah, I know they're filed in New Jersey, and hopefully New Jersey might come across. California, I wouldn't hold my breath. There's certain states that any policies like this are really tough. Minnesota's one of them. Boy, I wish we had plans like this in Minnesota, but Minnesota, Florida, California, New York is not even probably in the works. New Jersey usually will come through with some caveats here and there, but I can't tell you a good date on it. Massachusetts probably never. Connecticut might be a stretch, but Connecticut sometimes will surprise us. But basically, as soon as we know they get approved, we let you guys know. But I know there's just a few from practical knowledge that I know are tougher. So California, I'm betting will be a tough one. Anybody else?
Where can you get information on the LEAD program?
On which program? I'm sorry, Miss Jen. Which kind of program?
Is there a LEAD program?
LEAD program. You know what? If you call GoldenCare, we have some different things that we're working on with our brokers. We have a career shop, of course, that if you're willing to go captive or under our umbrella for all your products, we have a really nice program that's successful. But as far as the brokerage side LEAD program, we do have a couple things in the works. If you give us a call at 800-842-7799, like you see on your screen, and just ask for the regional director in your state and chat with them a little bit, because we do have something called our LEAD program. We're getting rolling, and we've got some different things going that we sure would like to get agents who are out there working hard become a part of it. You know, I can go lecture. I can talk all day about leads. If you guys have been in the industry, you know, they used to be a dime a dozen. You could get leads everywhere, and they were a piece of cake and not too expensive. Now it's getting tougher, so it's an expensive endeavor, but certainly pays off if you have people working them. So talk to your agent about that one.
Has it been filed in Florida?
This policy, Florida GTL. GTL has a weird thing in Florida where they had one of their other policies down there that they got in trouble with years ago for something that was kind of a dumb thing, truthfully. But Florida, I would say, yes, it's probably filed, but it may be a little bit slower haul for Florida. So I guess I don't know the best way to answer that, but I'm kind of thinking that it may be a while because Florida is just one of those states, and I think GTL and them have butted heads in the past over a different product, so I don't know for sure how quick it'll come in Florida if it does. Is that a good hedge?
Okay, I have one more question regarding the rider for critical illness.
Yeah.
What happens if someone has a stroke and they get that lump sum, and then 2 months later they have a heart attack? What happens with that?
Okay, now this is the critical accident now?
No, the critical illness or the critical care. I don't, remember.
Oh, the critical cash plan that we talked about. Yeah, good
right,
question.
right.
Okay, that's a different policy totally, of course, and that's the critical cash plan. And now you might have to repeat your question because I'm switching gears on things. You said, what happens if they have a stroke and then later on have something happen?
Yeah, I'm sorry. I thought that was also a rider. But yeah, let's go with the cash plan. What happens if they have a stroke and then a couple months later they have a heart attack?
Yep. Now, with that plan, it does cover multiple conditions. The main caveat with that one is it'll cover it, but not right on top of each other like that. So if somebody has a stroke, then what it'll do is it'll say 12 months after the last benefit has been paid out for that stroke, if you had another condition like a heart attack or something, then it would pay. So you do have that 12-month wait. So very common with strokes, by the way. Like Bill Cheney had a lot of problems with his heart, and they were broken apart in over a couple of years. He would have had 5 claims on that plan pay out because of the way it was set up. So it does happen very often, but they do have that little waiting period in there saying you have to have a wait between. And for everybody else on the phone, remember this is a different policy we're talking about. This is critical cash from GTL. So it does allow multiple claims, but there is 12 months between the conditions. Anybody else? If you have more questions on that critical cash, by the way, call us, 800-842-7799. To me, it is the best plan for people who, these short-term health care plans are perfect for people who are really, really, really unhealthy. They can't get anything else. For people who are just kind of like, boy, I really was close with long-term care, but they just weren't quite healthy enough, that critical cash plan is a perfect option for them because it's a pretty nice plan. So call in if you have questions on that in detail. Anybody else by any chance? All right. Well, tell you what, again, this is Tom Randall from GoldenCare. I can't thank you enough for spending time with me again. And be on the lookout. I think I have another webinar on Care Shield coming up on Thursday. Care Shield is the Minnesota Life Plan that's for healthier people, kind of at the long-term care level, but it does a great job of different option for somebody who might not want traditional long-term care insurance. So that's coming up Thursday afternoon, I believe. And again, check out those things on the slides when you get them. We have a lot of tools here to help you. Go to our website, check it out, get started with GoldenCare, and we'll make 2018 a great year. Thanks, everybody.